Is Netflix losing its streaming crown? The company's stock slid about 7% in Friday's pre-market trading session following its second quarter earnings report. Netflix missed analysts' expectations on earnings per share but topped their estimates for revenue and global net subscriber additions. It also announced a disappointing subscriber growth forecast. Market analysts were largely still bullish on the company, but said the results may mark the start of a new era for Netflix. Here's what four of them said after the report. Bernie McTernan, senior research analyst at Rosenblatt Securities, said the most important piece of Netflix's report was its guidance that it would see 2.5 million net subscriber additions in the third quarter versus the 5.27 million analysts are expecting. That's why the stock's selling off despite the beat on 1Q. What's interesting as well is the operating margin guide, 16% for 20. They have a new guide now for 21, which they didn't have before, of 19%. That's roughly in line with consensus. And then also, on free cash flow, they expect this year to be break-even to slightly positive versus $1 billion burn before. So, almost a flip here. Normally, you have bulls focused on subscriber growth. Well, the good part about this earnings period is actually probably the free cash flow, and the bears who normally focus on the lack of free cash flow probably have something to dig into on the subscribers here. Stephanie Link, chief investment strategist and portfolio manager at Hightower, said Netflix's miss could be the start of a trend for big tech. I think the sub numbers for the quarter were very good, very solid, but those numbers had been inching higher, all throughout the quarter. As I mentioned, Netflix app was downloaded 75 million times in the quarter. I mean, that is a huge, huge number. I also think the fact that production is going to restart means your cash burn rate goes up. And then on top of that, the company is talking about competition. So, to me, down 10% is not enough for me to buy it. I really would want to see this thing pull back materially more. But it also makes me worry about some of these other technology stocks that have rallied so much on the work-from-home theme. I think that is something that we all have to keep in mind, and, perhaps, maybe that is what the market is starting to sniff out, and which is why tech has underperformed the overall market in the last week. Sylvia Yablonsky, managing director for capital markets and an institutional ETF strategist at Direxion, said Netflix's potential hinged on its ability to keep producing quality content. Once production gets up and running, if they have some stellar new adds to the platform, I do think that, whether it's that work from home or study from home, people will have some hybrid situation that leaves them inside of the house looking for content.